In this video, we're going to talk about the 5 main accounts in accounting. So these 5 main accounts is essentially the bare basics of accounting. Every account that we're going to talk about in accounting is going to fall under these 5 main categories. So the first one is that of assets. So an asset is a future benefit. So all that means is that an asset is an economic resource that a company owns that's going to give us a future benefit. So this is very important because with the future benefits, we run the business. So for instance, a main asset is cash. Cash is a future benefit because we can use it to pay our employees, to buy inventory, etc., etc. Another key asset is that of equipment. That is also very important because we can use equipment to make our inventory. So once again, that's a future benefit. Now, the next one is that of a liability. So a liability is a future obligation. It's when we as a company owe someone or something in the future. So for instance, accounts payable, we owe our suppliers money in the future. Salaries payable, we owe our employees money in the future. So once again, a liability is a future obligation. Now, when it comes to shareholders' equity, there's different terms for shareholders' equity. It could be owner's equity or just equity. So in accounting, one thing you're going to realize is there's different terms for the same thing. So I'll outline those as we go. So shareholders' equity is the ownership stake. So shareholders' equity is very difficult to explain. So the best way that I like to explain it to my students is that shareholders' equity is equivalent to the net worth of the business. So let's just say, for example, I have the habit of Googling celebrities' net worth. What that means is they're taking the celebrities' assets, their future benefits, and they're subtracting the celebrities' liabilities, which is the future obligations. So shareholders' equity, or another word, net worth, is their assets minus their liabilities, which gives the ownership stake within the business. Now, the next account is that of revenues. So revenues is income earned. The entire purpose of a business is to earn revenues, right? So I want to make a key distinction. Revenue doesn't necessarily mean cash received because we can still earn that revenue and the customer hasn't paid us yet. So let's just say hypothetically that we sold products to a customer and they're going to pay us within 30 days. The fact that we made that sale, we still earned that revenue. But since they're going to pay us in 30 days, an asset now arises, which is going to be accounts receivable. Because now we have the future benefit of them owing us money in the future, right? And the last account that we're going to talk about is that of expenses. Expenses are costs incurred, consumed, or used up. And the key thing is expenses arise to help businesses earn revenues. So key examples of expenses are like rent expense, salaries expense, income tax expense, things like that.